This is the Asia Trade. I'm Shery in Tokyo.
And I'm Paul Allen in Sydney. The top stories this hour. A landslide UK election win projected for Labour and Keir Starmer. British voters turning on the Tories after 14 years in power. We're live in London. Also ahead, global stocks on track for their longest stretch of weekly gains since March, with the Asian benchmark at a two-year high ahead of the US jobs report. And Samsung expected to report sharp earnings rebounds this hour on a recovery in memory chip demand fueled by AI. All right, we've got some breaking news right out of the gate for you, and it is the current account balance for South Korea, and we're seeing a return to surplus. The balance of payments, where are we? A little bit over $8.9 billion. This is after a contraction in the month prior, in April, of about a little over $250 million. So we also saw the goods trade surplus coming in at $8.75 billion in May. So that was an increase as well on the $5.11 billion surplus that we saw back in April. So an encouraging turnaround there for the current account. We do, of course, have a Bank of Korea meeting coming up next week, Shery. And despite that slowdown in CPI, the expectation is we will have the BOK still on hold next week, but conditions lining up for a potential easing in the future.
Yeah, definitely a more favorable outlook when it comes to South Korea's economy. And one stock that we'll be watching in the Korea Open is Samsung Electronics, which is expected to see a big rebound when it comes to their earnings results, given the strength of the trade sector, exports, especially those semiconductor exports. But this is a setup across Asia right now. We don't have a very strong lead coming from Wall Street, given that it was closed on the July 4th holidays. But at the same time, we continue to see the dollar weakening, and that's really giving a lift to all currencies across Asia, even a little bit to the Japanese yen, and that really leading to the Japanese yen holding at that 161 level. But we have, of course, seen a strong equity markets for Japan. We're talking about the topics closing at a record high, and we're seeing that futures are pointing to the upside right now. Take a look at how U.S. futures are setting up. Of course, Paul mentioned that we do have those non-farm payrolls coming up. We're talking about a consensus expectation of 190,000 jobs being gained, the unemployment rate staying at that 4% level, and the NASDAQ futures at the moment pointing to the downside. Of course, we have seen an incredible rally for the U.S. before they went on holiday as well. Another record high for the S&P 500 and the NASDAQ. But really, Paul, it's about the political risk that we're watching right now.
Yeah, absolutely. And it is, of course, a public holiday in the United States, but President Biden has a number of engagements scheduled. He'll be making some Independence Day remarks a little bit later on, watching some fireworks as well from the White House lawn. But Shery, I think it's safe to say that every move from the president, every word he utters, the way he moves, it's all going to be studied very, very closely, because we're a week on from that very average debate performance that we saw. Those questions about his fitness for office and fitness for the candidacy not going away. He did, of course, win the support of Democratic governors yesterday, saying that, look, he's in the race until the end. We are going to win. He's got an ABC interview coming up on Friday as well, but that probably going to be fairly soft considering it's with a former White House staffer, George Stephanopoulos.
The world is really watching, given, of course, we are expecting global implications coming from the U.S. presidential election, right? Not so much so, perhaps, for the U.K. elections that some people are calling very boring and as expected, because exit polls have now really confirmed what was expected by the markets. We have seen the polls staying pretty steady for the past 6 weeks of campaigning, and the expectation right now is that if confirmed, we are going to see a Labour government. The pound is pretty steady, but going into the elections, we had the pound seeing a rally to a 3-week high. The FTSE 100 also gains to a 2-week high. Expectations perhaps that we could see more political stability. Perhaps let's get the latest on the UK elections from Bloomberg's Yuan Potts in London. Yuan, so polls now predicting a heavy defeat for the incumbent Conservatives. After 14 years in power, what went wrong?
Shery, and we've had some July 4th fireworks of our own here in the UK. It's been 6 weeks since Prime Minister Rishi Sunak stood in the rain outside number 10 Downing Street and called that surprise summer election. Well, the weather in London has improved, but Rishi Sunak's poll rating just didn't budge. Throughout most of the campaign, the Conservatives were 20 points behind the opposition Labour Party. And we've now had the exit poll for the results, and that is pointing to a landslide Labour victory with a majority of some 170. Now, that, to put it into a bit of context, is a majority similar to that gained by Tony Blair in his landslide win back in 1997. There was really a feeling this time that it was time for a change. We've had 14 years of Conservative government. It's been a period of enormous turbulence in the UK. 8 years ago, we had that Brexit referendum and all those negotiations with the European Union. We, of course, had a pandemic and a global energy crisis and high inflation. So after all that, Keir Starmer ran on a platform of change. He said he wanted to end the chaos, and he says he wants to get economic growth going again. It's a stunning turnaround for the Labour Party. They crashed to their worst defeat in 80 years under their left-wing leader, Jeremy Corbyn, 4.5 years ago. So this is a really big turnaround. Also gains for the third party, Liberal Democrats, and the new party, Reform UK, is predicted to get its first seats in the UK Parliament as well. They tried changing the message. The Conservatives tried spending big on advertising. In the end, nothing stuck. And there was really a feeling that the Conservatives, that the voters just wanted to get the Conservatives out and bring in a fresh face to number 10 Downing Street.
Yeah, we're just anticipating the first few results about to start rolling in any minute, but safe to say we're looking at a very hefty Labour majority here. What are the priorities for Keir Starmer's government?
Well, Keir Starmer ran on a platform of change and stability. Labour's campaign was really marked by caution. After the big defeat last time, they were clear that they didn't want to upset any groups of voters. And it was really a very cautious platform. They pledged not to increase income tax or VAT or indeed corporation tax, and no tax rises from the main levers of tax. And that leaves the government with a bit of a problem. The UK's public finances are very stretched. There are lots of things that Labour would like to spend money on. They pledged to improve the ailing nationalised National Health Service, but the money is very tight. They have said they'll also stick to the government's borrowing rules to get borrowing down by the end of the 5-year period. And that is going to be tricky for the Labour Party as well. On foreign policy, I think we can expect something of a continuity from the Labour Party and Keir Starmer. He's committed to NATO. He's committed to retaining the UK's nuclear deterrent. He wants to build stronger relationships with the United States and, importantly, with Europe as well. He has said that the UK will not be rejoining the European Union or the Customs Union or indeed any other major moves into the European Union. But what it would say is they would build incremental changes and negotiate smaller changes to the agreement with the EU. But I think there is little appetite on either side for lengthy negotiations into that relationship. So there'll be an inching closer towards the European Union without any radical changes. They're also keen to build relationships with the United States. Key figures from the Labour Party have been speaking to politicians in the US. And also in Asia, they'll be keen to work with the Chinese government, also to criticise them where they feel necessary. And they'd also like to deepen trade ties with India as well.
All right, Bloomberg's Yuan Potts there in London. We do have live pictures of some of the early results. Sunderland Central looking like a hold for Lewis Atkinson of Labour. So those results starting to roll in. But there will be many more to come. Labour on track, according to exit polls, for 410 seats. All right, let's take a look at the British pound. Not a great deal of movement here. Let's talk some more about this with Garfield Reynolds, leads Bloomberg's Markets Live coverage. Garfield, the pound really suggesting that no shock here. This is playing out pretty much as everybody expected.
Yeah, well, I mean, as mentioned, the opinion polls from 6 weeks ago when the election was called were forecasting something along these lines of these results, without perhaps the strong showing for the Reform Party. And the showing for the Reform Party was not so strong as to override, the basic picture. Labor's got a big majority. It's not too big, which is one thing that has spooked markets at times before, when an expected winner got too big a win so that they might feel they could go too out of control. So, Starmer's campaign, as far as the markets were concerned, was very much about that line of fiscal prudence, no major tax increases, kind of steady as she goes. So at least in the initial running, you would expect British markets to respond pretty much in line with that. There are some particular areas of the equity market that might see some action, banks, housing stocks, because of some specific policies. But as far as the overall macro outlook, this is not at all a surprise. You have to wait and see what they actually do once they're in power and whether that is welcomed or not so much by the markets. But for now, well done England for carrying out a very boring election would be the market response, I think.
And the polls got it right as well, which is a refreshing change in terms of recent history.
Yeah.
However, when a party wins a thumping majority, the temptation is always there to use it. Britain's got some problems as well in terms of mounting debt, a lot of things that need spending as well. The NHS, housing, just to name a couple. Could we see tax increases? Could we see a larger deficit?
Well, we can certainly see a larger deficit. I mean, larger deficits are very much, the trend right now, which is, driven by, there are global trends that are pushing governments to spend more. Cost of living crises, they throw up, voters needing or certainly wanting very strongly for them to get help or them to get relief. At the same time, we have an increase in defence spending because of the geopolitical tensions out there. There's also the onshoring trend as globalisation fractures, tensions with China, tensions with Russia, and paying for the green transition. That's all also, at least in the short term, a big cost. So if Britain's budget deficit does expand, it won't be alone in that, and to some extent the way the market reacts is how much sense does this make of these measures that are going to boost productivity or are going to give the UK some advantages down the road, and also is the UK just in line with others? It's not likely, for example, to go as large as the US is expected to.
Right. All in all, though, as you talk about stability, continuity, this seems like good news for investors who have been bullish on the pound, for example, at a time when perhaps uncertainties are bigger elsewhere in, say, neighboring France.
Yes, very much so. And France, we're talking about concerns about what might go on with government spending. There was a lot more concern about France's budget situation even before the European parliamentary elections and President Macron's decision to call a snap election that in the best case scenario for him now is going to mean that Le Pen's party is a much bigger force in the parliament than it was before this election. So the France situation is more concerning as far as the markets are concerned than the UK one was, even going into the two elections. And as I said, the UK election has gone smoothly, looking like a stable transition. The France election has not gone smoothly.
Right. We'll be watching that election coming up on this Sunday as well. Garfield Reynolds, who leads Bloomberg's Markets Live Asia coverage, with all of the market reaction, given, of course, the political risk that we continue to see across Europe. Perhaps a less risky situation, at least economically, when it comes to South Korea and those trade numbers turning into surplus. We just saw that, Paul, a few minutes ago. One of the big gainers from that will be South Korea's largest company, Samsung, releasing preliminary earnings later for the quarter of June. And we are expecting really both quarterly revenue and operating income to rebound due to semiconductors.
Yeah, a big turnaround is anticipated here. We got a bit of a preview as well this week from the South Korean government, but it said, in June, the country exported the most semiconductors ever on record. So it will be interesting to unpack these numbers when we get them. Of course, just a partial earnings announcement. Later in the month, we'll get net income, divisional breakdown as well. But we are anticipating, Shery, something pretty special from Samsung a bit later on.
Yeah, operating profit estimate for 8.33 trillion won will be the number that we'll be watching. Coming up on the Asia trade, Pendal Group shares their fixed income strategy next. We'll dig into Samsung's preliminary second quarter earnings with CLSA a little bit more as well, and elections in the UK, France and the US set to impact economic policy and move markets as well. Analysis ahead with Standard Chartered at Monash University. This is Bloomberg.
Let's get some more on the markets now. Joining us here in Sydney is Amy Sherpatrick, Head of Income Strategies at Pendal Group. And Amy, politics and the markets very closely intertwined at the moment. We've been talking a lot about the UK this morning, but I want to talk about the US as well. President Biden's got a number of Independence Day events today. I imagine he'll be very closely watched. What are you gaming out in terms of potential Trump victories, potential Biden withdrawals? What's your thinking around all of this?
Yeah, look, the first thing to say is really, how are these the two major contestants, right, for the next US president? But beyond that, for me, from a market's perspective, I've got to think, well, what if one or the other side wins, and what kind of victory does it look like? We've got some historical insight. You know, historically, you can see that bonds generally have a very volatile time of it when surprisingly, when the Congress is split, depending on, you know, regardless of how the chips fall. And surprisingly for both sides, you know, if Trump has a very clear win, or Biden has a very clear win, or whoever Biden's successor may be has a very clear win, it may not be that bad for bonds overall. For risk markets, though, I would go back to maybe a few weeks ago when we had all this news out in France and, you know, all the political instability there. Overnight, you saw a huge destabilizing of risk sentiment globally, and it even showed up in investment-grade credit markets. I think that's a reminder that risk premium is probably too low for the amount of political risk that we've got, not just in the US, but in the world right now.
How would you describe your risk appetite at the moment? Do you have one eye on haven trades?
I have more than one eye on haven trades, I would say, at this point. Look, if I can go back 6 months, back then I thought, you know, the chances of a recession later in the year, early 2025, probably still being too heavily discounted by markets, but it's too soon to position for that. I needed to be able to stay in risk to be able to keep up with, you know, all the gains that we've experienced since then. More recently, and I would say in the last couple of weeks or so, it's been time to scale back some of those riskier bets. And it's also been time to start stepping into some duration trades, which is my favorite haven trade.
Amy, it doesn't matter the way that we cut it. It seems that going into election season, whether it's in the UK or the US or France, we might see more public spending. How much will fiscal sustainability issues drive markets globally, especially after a potential Trump presidency?
You know, fiscal spending will come up again and again, I'm sure, in the next, you know, few months. And there's no doubt, you know, when the market gets concertedly worried about this and it's positioned offside, it is market moving. I'm just curious as to really how market sustaining some of these worries can be. So I agree that fiscal sustainability issues for developed markets, for countries that have been taking on more and more debt, especially since the pandemic, you know, it does pose a long-term question over, government bonds really, you know, are they going to serve the same role in portfolios, you know, several decades from now as we've been expecting them to? In the very near term, I would be very surprised that these concerns can't be very easily superseded by any whiff of softness that you see coming through the economic data.
Do you expect UK policymakers to have learned from the gilt crisis 2 years ago, and what does that look like in terms of your investment portfolios when you look at markets across the UK asset class really staying pretty calm?
Yeah, look, I don't think it's only UK policymakers that have learnt from the mistakes back then. I think policymakers the world over have. And more importantly, to your earlier question about, fiscal sustainability, and, a lot of the weakness in bonds over the last week or so in the US has definitely been led by the fact that, the Treasury is trying again to issue in the mid to long end of the US curve. Does that destabilize sentiment? Does that make people worry again that there's going to be too much bond supply? I would say that, one of the learnings that maybe the US Treasury has taken from the UK experience is you've got to issue to where the demand and where the appetite is. Given the inversion of the US curve, the demand and the appetite clearly seems to be in money market funds, seems to be at the very short end. And I suspect that if the market can't take it, that level of supply in the belly or the long end of the curve, again, issuance will revert to back there.
Amy, I just want to talk about some markets a bit closer to home, focusing on China mainly. The CSI is on an epic losing streak at the moment. China has a number of problems heading into the third plenum. Do you anticipate any policy coming out of this that's going to meaningfully change the narrative?
No, not at all. I don't think they've got that much wiggle room. If I can sort of zoom out a little bit into the bigger picture, when you think about the property sector and the damage that it's caused to the Chinese economy, it's on par with what the GFC did to global credit markets and the balance sheet hole that it left in the US economy. That balance sheet hole took nearly a decade to repair itself. None of this is easy work. None of this is a quick win overnight. For the Chinese economy equally, and perhaps more pressingly, because the property lever was such an easy go-to lever for it, it needs time to not only repair the balance sheet hole left behind by that crisis that is, arguably still unfolding, but at the tail end, but also it needs time to search for these new growth drivers that we keep hoping for. These growth drivers are not going to be announced in the third plenum.
And just here in Australia too, we've had some hotter than expected inflation prints recently. There's a conversation starting up now that maybe the next move from the RBA is up. I know that maybe you think that fear is getting a little bit overblown.
I definitely think the fear is getting overblown. And I have to remind myself, we've all lived through this inflation crisis since the COVID pandemic, right? And at the very beginning of it, late in 2021, we heard the RBA being very convinced that it didn't need to hike until 2024. And lo and behold, all of that changed very quickly. And right now, the market is definitely, upset by these discussions within the RBA, and we see it in their statements, we see it in their minutes, that a hike is being considered, maybe holding is the right thing, cuts are kind of out of the question. So, yeah, it's understandable that the market thinks that there's a real risk to hiking. I just think that we're not fully considering the path that the RBA has been on. And then the other side of the coin that they have to worry about, which is the fact that growth in Australia is at multi-decade lows outside of the pandemic episode. Multi-decade lows. You can go back over 20 years and growth has not been this low. Hiking just seems, the bar for hiking in this kind of a growth environment seems very high to me.
All right, good context. Amy Sher-Patrick, Head of Income Strategies at Pendal Group. More ahead on the Asia trade. This is Bloomberg.
We're getting Japan's household spending numbers year on year. Sorry, Paul, we do have breaking news at the moment. We have the household spending numbers in Japan. Year on year is a contraction of 1.8% for the month of May. The expectation was for a gain of 0.3%. And remember, we're coming off the backs of households having boosted spending for the first time in 14 months in the month of April. And we're back now in contraction territory. So really a lot for the Bank of Japan to think about. Of course, inflationary pressures are continuing to hurt households. We had seen Japan's annual pay really end with the highest raises in more than 3 decades, but perhaps that really not leading to a sentiment boost because households have now really slowed down spending for a contraction in the number of 1.8% year on year for the month of May, Paul.
Well, Shery, sorry about that. I'm so excited about the European Union moving ahead with its plans to impose provisional tariffs on Chinese EVs. This is, of course, a step likely to escalate trade tensions with Beijing. So let's get a bit more on this. Asia transport reporter Danny Lee joining us now. So, Danny, is it clear yet who the winners and losers are going to be in this latest stage of announcements on tariffs?
Yeah, the European Commission signalled on Thursday that it was not prepared to back down at this stage, which is a blow to Beijing as they frantically launched talks with Brussels only weeks ago in order to try and pull everybody back from the threat of additional tariffs. It's clear right now that the biggest losers are the Chinese brands who are looking to conquer Europe with their very affordable, stylish electric vehicles, and with the kind of additional tariffs that we'll see of up to 38% on top of the current 10% tariffs that are already charged. So this could cause a lot of upheaval if indeed this does come through by November, when we see the more definitive tariffs imposed, where money will change hands, duty has to be paid. But as of yesterday, on Thursday, the tariffs do kick into effect, and there will be a count back from between now and November. But in an interview with Bloomberg on Thursday, Valdis Dombrovskis, the European Commission's Executive Vice President, said the talks with China is still ongoing. And so he signalled very much that this doesn't need to happen, that these additional tariffs don't need to happen. And if there is an agreement that does find some common ground, everybody can step back. And it's clear, though, that Brussels is kind of stressed about this market distortion, which it sees on subsidies of Chinese EVs.
But the issue here is that this is just not about Europe, is it? I mean, it's about Western nations, including Canada, that was weighing already. Last month, we reported more tariffs on China as well. What happens next in this geopolitical environment, especially as we head towards the U.S. presidential elections as well, and we continue to hear more about potential trade tariffs?
Yeah, I mean, the barriers of tariffs have been put up in other parts of the world, which is more of a concern for the Chinese EV makers. But in this kind of global geopolitical kind of landscape, it's clear that China will be looking to try and solve certain issues where it feels it can make headway one by one. And these talks with Brussels, between Brussels and Beijing, are clearly going to be very important. China wants this to happen. Its message, its tone even on Thursday was one of, we think we should do a deal here. But if not, the retaliatory steps that China could take could be, in many ways, punishing on Europe in its response to what it sees as unfair competition. But I don't think anyone wants to see that happen, particularly not least someone like Germany, who has a lot at stake in all of this.
Our Asia transport reporter Danny Lee there, and as he was mentioning about potential retaliatory tariffs coming from China, in fact, we heard from the European Commission Executive Vice President Valdis Dombrovskis speaking exclusively with Bloomberg about that. Take a listen.
Today, we took the decision to impose provisional countervailing duties on Chinese battery electrical vehicles, basically to ensuring the level playing field and market distortion coming from subsidies which China is providing to its battery electrical vehicle producers. So our investigation has been done in strict correspondence with applicable WTO and EU rules, facts-based. So from that point of view, we do not see any basis for retaliation, and in any case, it's clear that we need to treat different cases separately.
So you're not even worried about retaliation, for example, into pork? They're investigating it. And if there was to be retaliation, are there specific industries that you think would be most at risk?
Well, as I said, we are not seeing the basis for retaliation, as what we are conducting is indeed in line with WTO rules. What we are also noting that actually we are currently the largest market which is actually open to Chinese battery electrical vehicles. We know that other jurisdictions like US, for example, have recently imposed 100% tariff on those. So our aim is not to close the market to battery electrical vehicle producers from China, but only to ensure the fair competition and level playing field. So therefore, once again, we do not see any basis for retaliation for that.
So how's the progress going in terms of talks with China? And actually, is there willingness from China to make some of the substantial changes that led you to then put the tariffs on?
Those talks with China are ongoing, and indeed, should the mutually beneficial solution emerge, we can also find ways and not to apply at the end of the day the definitive tariffs. But it's very clear that this solution needs to resolve the market distortion which we are currently having in battery electrical vehicles and risk of injury for EU industry, and it needs to be WTO compliant.
Are you worried that member states can actually then block this, block the tariffs in November, or force the EU into a bad deal?
Obviously, we are in a close consultation with member states now, also prior to imposition of those provisional duties. And it's clear that member states are also interested to protect their automotive industries from unfair competition and from risk of injury, as actually the market share of Chinese, both Chinese brand and broader, like made in China battery electrical vehicles, is rapidly growing. So from that point of view, if we leave the situation unaddressed, it's going to create more and more problems actually for EU automotive industry.
Executive VP, we're also days away from the second round of the French, of course, legislative election. Are you worried that a hung parliament would actually delay any kind of negotiation on policy, or would delay the workings of the European Commission and the EU?
Well, definitely we'll have to see. Well, there I have to provide somewhat institutional response, because in the European Commission we have a clear policy that we are not commenting elections or party politics in member states. We are working with democratically elected or appointed authorities from member states.
That's European Commission Executive Vice President Valdis Dombrovskis speaking exclusively with our colleague Francine Lacroix. Some other stories that we're following. A senior US official says Hamas has broadly agreed to the framework of a ceasefire proposal with Israel. The response was received earlier this week through Qatari officials. The US official calls the development encouraging, saying it may provide the basis for an agreement to free some Israeli hostages from Gaza. Israel is now said to be sending a delegation to Qatar for further talks. China and India have agreed to hold further talks to resolve a long-standing border dispute. Indian officials say Foreign Minister S. Jaishankar and his Chinese counterpart Wang Yi met on the sidelines of the Shanghai Cooperation Organization summit in Kazakhstan. A separate Chinese statement says Yi told his counterpart China and India should actively resume normal exchanges. China and the UAE are set for discussions in the coming weeks to increase two-way flights. Sources say officials will meet in Beijing to discuss granting airlines more access after years of stagnant travel growth. We're told both sides want more connections above the current 56 flights per country each week. More to come on the Asia trade. This is Bloomberg.
We're awaiting Samsung's results due any moment now. Of course, we don't get the divisional breakdown this time around. It will be the preliminary numbers. But let's get to our next guest, who has a buy rating on Samsung Electronics. With us now is Sanjeev Rana, head of Korea research at CLSA. Sanjeev, great to have you with us. There's been a lot of optimism about South Korean exports around semiconductors, and that in turn, of course, is leading to more optimism about Samsung. Tell us a little bit about how much they're going to benefit from this trade boom.
First of all, thank you for having me on your program. So Samsung Electronics, along with its crosstown rival SK Hynix, they are the key beneficiaries of the AI revolutions. These two companies combined together have nearly 90% market share of the high bandwidth memories, or HBMs as they are called. And this is what is driving the AI revolution. So HBMs have become an essential part of AI boom. And all our checks suggest that HBM demand growth in the coming years is going to be very strong, not only from AI training, but also from inference. So cloud hyperscalers are, are ordering and are favoring the use of NVIDIA's chips and also AMD as well. But HBM is actually very basic to this. So we expect HBM-related demand to be very strong in the coming years, and Samsung and SK Hynix should benefit from this.
We know that we are expecting a little bit of a slowdown from the mobile segment. Is that a concern?
For Samsung, yes, because it's the biggest smartphone maker in the world. They have about 20% market share, and smartphones accounts for, in a normal year, it counts for about 25% of the company's profit. So, of course, the slowdown is going to hurt them a bit. But in the last few years, we have seen that Samsung has done a remarkable job in keeping its share of the premium phones relatively intact, or actually they have been successful in growing the share of the premium phones as a percentage of their overall sales. And as we know, that premium phones are what delivers bulk of the industry's profit. So Samsung's smartphone business profitability has remained remarkably resilient despite overall volumes taking a hit because of the weak demand in the last 2 years.
How about the outlook for Samsung's foundry business? Because I know that you note that there's a lack of big customers here. Do you see that changing?
Yes. I mean, Samsung's foundry business has struggled to secure big customers for its leading edge nodes. However, we remain hopeful that AMD might be, a customer. They are looking to use the Samsung's 3-nanometer GAA process in their upcoming GPUs. So that's where we see there is an opportunity. Actually, Samsung is also in talks with NVIDIA for fabricating their future GPUs, possibly in 2026 or 27. So yeah, I mean, AI boom will offer lots of opportunities for the company.
Sanjeev, just as you were answering there, we did get the second quarter results from Samsung. Here they are. Operating profit, 10.4 trillion won. That beat the estimate of 8.34 trillion won. Sales coming in at 74 trillion won. That was also a narrow beat. The estimate was for 73.05 trillion won. So we were expecting some solid numbers, and those were surpassed. What's your initial reaction here?
Clearly, my initial reaction will be like the semiconductor business was the reason behind this big beat. We are in a memory upcycle with DRAM and NAND ASPs both going up substantially in 2Q by double-digit percentage points sequentially. And I believe the company also saw the reversal of inventory valuation losses they incurred in the past because of a big increase in the NAND ASPs in the last quarter. So I think there was this one-time gain also related to inventory valuation, reversal of inventory valuation losses. Probably that also helped the company's earnings. But overall, it sounds like a very strong set of numbers. And this memory ASPs upcycle that we are seeing, I think this will continue to drive companies' earnings in the second half and even beyond.
Are there some risks ahead coming up in the second half, though? Because, I mean, Samsung's on the brink of facing industrial action at the moment, a 3-day walkout of 28,000 staff. Do you see costs rising not just in the manufacturing side of things, but also perhaps for the wages bill?
Yeah, definitely. Some pressure will be there from this labor unrest. But currently, semiconductor business is the biggest contributor to companies' earnings and where we are seeing meaningful price increases. I think they will be able to offset some of the cost pressure. And in the second half, we expect companies' high bandwidth memory shipments to also pick up. For information, company had a labor unrest for a day last month. But they didn't have any meaningful impact from that because a lot of fabs, semiconductor fabs, are pretty much fully automated with very little scope for direct human intervention. So at least semiconductor business earnings are unlikely to be impacted. I can see some impact on the mobile or let's say consumer electronics, but they are a small part of the company's earnings.
Well, we've got Samsung trading at the last close, 84,600. I know you rate Samsung a buy. What's your outlook for the share price for the rest of the year?
So our current target price is 130,000 won, which is nearly 40% upside. And given the shape of the memory upcycle we are seeing, I think there could be, the consensus earnings estimates continue to be revised higher. And in the coming quarters, we expect both share price, and the company's earnings to do very well.
All right, Sanjeev, Rana, head of Korea research at CLSA, helping us unpack those very strong Samsung numbers. Here are the latest corporate stories we're following. HSBC's sale of its German wealth management unit is said to be attracting initial interest from peers, including BNP Paribas and UBS. Sources say Julius Baer is also studying the business, which could be valued at about $640 million. HSBC is said to be keen for a buyer with a global brand and existing operations in Germany. Bloomberg has learned that insurance giant AXA has been in talks with BNP Paribas about options for its investment management unit. We're told discussions between the French firms have focused on creating a joint venture between AXA Investment Managers and BNP Paribas Asset Management. The combination would have a total assets of about $1.5 trillion. Hong Kong developers in New World and Far East are selling a residential project at the lowest price in 8 years for the city's Kai Tak district. Midland Realty says the pricing represents an almost 30% discount to other projects in the area. Home sales in Hong Kong have resumed falling amid high borrowing costs, even after extra taxes were scrapped earlier this year. More ahead on the Asia trade. This is Bloomberg. All right, we've got some live pictures here from the UK. That is vote counting underway in the constituency of Richmond in Yorkshire. I believe that's actually Newcastle you're seeing there, but vote counting is underway in all over the country at the moment, including Rishi Sunak's constituency. He is expected to survive, but Tory chairman Richard Holden could be in a bit of trouble. Despite a Conservative majority of 20,000 in 2019, his seat too close to call, Shery.
Yeah, we continue to watch political risk across the world, right? I mean, in Europe, we do have the French final round of parliamentary voting as well. Well, that same Sunday, Tokyo is electing a new governor as well, with voters deciding whether to re-elect a governor supported by Prime Minister Kishida's party or pick an opposition-backed challenger. Let's bring in Tokyo Bureau Chief Isabel Reynolds. Isabel, with a record number of candidates right now, what are we expecting to happen this Sunday?
Yes, well, we do have a record number of candidates, but to be honest, the vast majority of them are totally irrelevant. This has mostly been a two-horse race, as you say, between Yuriko Koike, who has this sort of close but somewhat complex relationship with Fumio Kishida's party, and we have another high-profile opposition party candidate, Renho, who is backed by the Communist Party of Japan and also by the main opposition Constitutional Democratic Party.
Talking about irrelevant candidates, I actually saw one that was dressed as the Joker, but I just want to ask about what issues are being played up here, that you have so many different candidates, and what are the most relevant for people?
Right. Well, the things that have been focused on mostly from the opposition point of view, Koike, as I say, has had this long relationship with the LDP. She's a former member. So the opposition have been attacking her on the same issues that the LDP has been attacked for, which is corruption, which is like spending money on the wrong things. Where is taxpayers' money going? For example, there are various development projects in Tokyo, and they've been throwing doubt on that. Why did things go that way? On the other hand, the sort of total society in Japan, as you know, the birth rate has gone down way below what is a sort of replacement level for Japan. So the fertility rate, how to encourage people to get married and have children, the demographics issue, that has been a huge focus of the debate.
There has also been a lot of focus on the fact that it seems that two front runners are women at this point, but in a society where it's not really common to have many female politicians.
Yes, I think, well, Koike was a great sort of breaker of glass ceilings throughout her career. She was the first woman to run for leadership of the LDP. She was the first woman to become defense minister in Japan. So the only way, I think, for an opposition candidate to overcome her, it was probably felt that it was only with another woman that they could really try to do that, to create a similar kind of buzz. So that's why Renho came forward. But some of her opposition vote is being taken away by actually a younger male candidate who's come into the race. He's unlikely to win, but he's putting up a good fight, and he will no doubt increase his profile in the political scene going forward.
All right, Tokyo Bureau Chief Isabel Reynolds there. Well, we're just about 5 minutes away from the Open here in Australia, also Japan and South Korea. Plenty to be keeping an eye on today. Of course, we did just have those Samsung results. Operating profit, 10.4 trillion won. That was a beat. Sales, 74 trillion won, also a beat. So definitely be watching Samsung at the Open. Here in Australia, futures pointing to a somewhat tepid day, but we should probably keep an eye on Santos as well. This is the gas producer. We reported yesterday that Aramco and ADNOC were considering bidding for Santos. Aramco has since denied all of that, so we'll see if there is any meaningful change in the Santos share price after a pretty decent run-up yesterday. Nikkei futures, meanwhile, they're better by about 0.1%. Those market opens in Sydney, Seoul and Tokyo. Up next, this is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. Not a strong lead coming from Wall Street, closed for the July 4th holidays. We are expecting President Biden to make an appearance at the White House for the Independence Day celebrations. But what we were watching was political risk across Europe. The UK exit poll confirming what the markets had factored in when it comes to general elections. A majority win for the Labour Party. Sterling holding steady. Of course, that was pretty much an expected result. It did get a boost coming into the election, hitting a 3-week high. More political stability expected. European stocks also rose in the previous session. You can see U.S. futures at the moment holding steady as well, as we saw a little bit of weakness for the U.S. dollar, and that's really helped boost Asian currencies across the board. You can see the Japanese yen now trading very steady. We saw a little bit of a boost overnight, but the Nikkei continues its rally up 0.25% at the open. Remember, the Topix is already at a record high. Although we did get some household spending numbers out of Japan in the previous hour, not looking that great. It was a contraction again after households actually spent for the first time in 14 months the previous month, and we saw a boost in the data. So we'll be watching those consumption stocks very closely. Another stock that we'll be watching in the Korean Open will be Samsung Electronics. It just released its second quarter operating profit, beating expectations, coming in at 10.4 trillion won. You can see the Kospi gaining ground across the board, and the tech-heavy Kosdaq is also up 0.3%. Samsung Electronics up more than 1%. Perhaps not surprising, this very positive number when it comes to Samsung Electronics, given that South Korea's main current account has also moved to surplus. We are seeing growth when it comes to trade demand for artificial intelligence and semiconductor exports from the country. Take a look at how Australia is coming online. We continue to watch the Aussie, which has been pretty strong the entire week, given that retail sales rose more than expected and expectations of where the RBA will go from here. And of course, iron ore also hitting multi-month highs. So that led to a boost in the Aussie, but not so much at the moment. And the ASX 200 also trading sideways as we continue to watch treasuries as well. Futures trading like this, we are now getting cash trading finally opening after yields sank in the previous session ahead of the holidays in the U.S., given weaker than expected data. But really, Not a lot of weakness when it comes to those results from Samsung Electronics, just posting its fastest pace of profit growth in years. This, of course, as AI development fuels really those gains in global memory chip demand. Asia Technology senior reporter Yulim Lee joins us now from Seoul. Yulim, what's a key takeaway from these numbers?
Hi, yeah, sure. So Samsung's numbers came really positive. They exceeded the expectations for the quarter. I think this really reflects the rebound in the memory chip industry overall that really was depressed. And last year, they really went through a very severe downturn after the COVID era. So it really reflects a rebound from the market, as well as like really booming demand for the AI chips that are being used, in data centers and ChatGPT type of development. So there is this booming demand for AI memory, and Samsung is benefiting from it.
I know that we don't get the divisional breakdown until later in the month, but we were expecting some weakness in other sectors like mobile, for example. So are there other things that we should be watching out of these results aside from just the AI boom that might cause some concern for investors down the line?
Absolutely. Mobile phone division probably didn't do very well in the second quarter, as is usually the case every year, coming from a very strong first quarter when they launched their S24 smartphones. What is really important to notice is this memory chips division that's really rebounding really shows their development in the chip division, which is really pivotal division for the Samsung's overall business. So last year, they lost, this division, semiconductor business unit, lost about $11 billion. That was a record in history. And this year, they are trying to change all that by changing their head of the division abruptly in May, and they're trying to really revive that industry overall. Last year, a year ago, they lost about 4.4 trillion won, and this year we are expecting that division to post about 5 trillion won in operating profit. So that's a big rebound from a low base. So, I think this division and how they're going to, develop in that memory chip industry, as well as the high bandwidth memory chips that are really hot, that remains to be seen.
Especially given that the shares have lagged SK Hynix because of those advanced chips, right? What does the competition look like for Samsung right now?
Well, their closest rival in HBM chips, which is one of the most booming areas in memory chips for AI, Hynix has been having their dominance in this space because they moved earlier than Samsung, and Samsung has been playing catch up with SK Hynix right now. And SK Hynix obviously wants to cement their dominance in this space by supplying to NVIDIA and other major customers. And SK Hynix just announced investing 80 trillion won over the next 5 years in HBM. So this is quite a big commitment and something that is going to rattle Samsung, and they have to move fast.
Our Asia Technology senior reporter Yulim Lee there with the latest on South Korea's biggest company, Samsung Electronics, beating market expectations when it comes to those earnings for the June quarter. take a look at how Japanese stocks are trading at the moment, because the Nikkei is now touching a record high for the first time since March. Of course, we have seen the longest winning streak in Japanese stocks since January. The rally continues, and we're now at around those record high levels for the first time since March. We had already seen the topics close at a record high. We continue to watch the markets across Japan as the Japanese yen holds steady at that 161 level. We had seen a little bit of a boost overnight, coming off its lowest level against the dollar since 1986. But right now, we're seeing a little bit of pressure for the Japanese yen as well. That really makes you think, are we going to continue focusing on those exporters, but at the same time, the BOJ implications of this as we're headed towards another rate decision with the number from their household spending, the latest economic data just a few minutes ago coming out in a contraction, despite the fact that in April we saw the first boost and rebound of spending for the first time in 14 months. Really tricky situation for the Bank of Japan, really, to hike those rates and tighten. Let's bring in Daniel Lam, Head of Equity Strategy at Standard Chartered Wealth Solutions, to sort of figure out what this means, right, Daniel? Because we were really very much focused on the political risk stemming from the U.S., stemming from Europe. But right now, when it comes to equity markets here in Japan, we continue to see the rally, and we have to wonder how sustainable this is.
Well, that has to do with partly has to do with the presidential election debate, right? Where, Trump came out ahead, and now investors are positioning for a more likely Trump victory. So what happened back in 2016 was that the dollar strengthened and then the U.S. yield curve steepened. And so you saw the rebound in yield after the election debate. So that actually lends more tailwind to the dollar yen. It makes the dollar go stronger against the yen because of history. When Trump won, the U.S. dollar gotten stronger, so people are projecting for that victory. So now, combining with all these means that the dollar yen is probably going to be, still trending higher in the near term, and that's favorable for Japanese equities.
You made that beautiful connection between what's happening with the U.S. presidential election and here in Japan, but at the same time, we do know that Japanese stocks have become less dependent on the weakness of the Japanese yen, with less concentration on those exporters. So I guess my question is, if we continue to see some weakness in the consumption side of things, as seems to be the case with the household spending data, for example, how much confidence can investors continue to get about this market?
Well, it depends on what kind of stocks they'll be involved in. I mean, if you look at the selective domestic plays, they're still doing okay. So areas, for example, like the financials, we do like them for a technical term because of the fact that, the yield curve is still projected to be on the steepening side, right? Data may be slowing down, but we do believe that the BOJ is eventually going to be tightening their policies as opposed to the rest of the world. So that is, good for the financials if you have yield curve steepening there.
But when it comes to Asia, your preference is for another market, India. Why?
Well, we've seen the elections that caused a shock to the markets, but then the bonds and the equity side both recovered very nicely afterwards with good volume. And we do believe that, despite the fact that the BJP didn't get an outright majority, it actually would help them or steer them to address the weakness that they've seen in the voting, right? So the rural area, because of the fact that the food inflation is high, even higher in the rural area, that, they voted, some of them may have voted, given a vote of discontent, right, to the BJP. So what that means is that the policies are going to be addressing, these under-addressed area in the Indian economy, i.e. the rural side. So that is actually going to make the economy healthier, and the growth continues to be strong. And of course, we do have factors like the demographics is very favorable, and then the middle class growing consumption in India. So all these acts very well for the markets.
Yeah, no wonder we're seeing emerging market stocks at the highest level in more than 2 years. But when it comes to EMs, it's always that question about volatility, right? Especially if you have more global political uncertainty, whether it's around trade, whether it's around a war continuing to rage in Ukraine as well. When you look at what's happening in Europe, especially with the UK elections, it's really interesting how you're seeing more calm in the markets because we are expecting perhaps more continuity and political stability in that country. What are you expecting in terms of where the opportunities could be in this environment?
Well, in the UK, I believe that a lot of the market was pricing a big Labour victory, and we are seeing that. In Euro area, it's a little bit, shakier, okay, because the right-wing party, they won the first round, and now the other parties are joining forces. So in terms of the Euro area is a little bit more unclear. Of course, right now they're saying that the right-wing party is not going to be able to get the majority, right, in the second round. But then, it would be a medium-term concern for the Euro area equities. So we do see investors rotating into areas like the technology side of things in Europe. It's a really tried and tested trade in DM, right? In the US, in Europe, wherever you see some issues, they'll be rotating into the tech side of things. And because of the financials in Europe, they're concerned about the fact that, if the France growth policies will be stalled, then it would not be good for them. So people are just going to say, okay, let's go to tech because it's AI, it's a long-term growth trend, semiconductors.
Yeah, sort of a sure bet when it comes to the growth fundamentals, right? Daniel Lam, good to have you with us, Head of Equity Strategy at Standard Chartered Wealth Solutions. We'll have more on the Asia Trade. This is Bloomberg. Counting is underway for the UK's general election after exit polling projected a landslide win for the opposition Labour Party, ending 14 years of Conservative rule. Let's get to the latest from Bloomberg's Yuan Potts in London. Yuan, so a heavy defeat appears certain for Rishi Sunak's government. What went wrong for them, and does this pose an existential threat?
Well, Shery, it's been 6 long weeks since Prime Minister Rishi Sunak stood in the rain outside number 10 Downing Street and announced a surprise summer general election. The weather has improved, but really the Conservatives' poll rating just didn't budge during the campaign. There was a 20-point gap between Labour and the Conservatives for most of the campaign, and nothing they tried could really shift the mood of change. Voters wanted to see the end of the Conservatives after 14 years. It has, of course, been a turbulent 14 years for the UK, not just the Brexit vote, but the pandemic and an inflation crisis, energy prices rising very rapidly. Labour stood on a programme of change and on bringing back stability. And the exit poll we've had so far suggests Labour have won a landslide election victory. 170 is the projected majority of seats in the House of Commons. That would take it very close to the 179 which Tony Blair won by in 1997. It was really a programme of change and of stability, and the Conservatives really failed to engage with voters. They tried all sorts of things, but in the end they lost out, and it's looking like a very heavy defeat for them.
A heavy defeat also means less of an opposition when it comes to the Labour Party and Starmer, right? Could that also perhaps mean more taxes, more public spending?
Well, Labour were very clear in this election campaign. They stood on a platform, a very cautious platform. They pledged not to increase income tax, national insurance or VAT, or indeed change the rates of corporation tax. You'll see the results coming up on the screen now. We've only had 7 or 8 results so far. Interesting to see some of the results that we've had already. One cabinet minister has already lost his seat. We could be on watch for several more of those to happen as well. There's a chance that the Chancellor himself, Jeremy Hunt, could be under threat in his prosperous seat on the edge of London. He's under threat from the Liberal Democrats. And there has been talk that perhaps Rishi Sunak's seat may be at risk. But I think that is an outside chance. Rishi Sunak has a very safe seat in Yorkshire, so that is fairly unlikely. But people will be watching out for that later in the night. Looking forward to getting into the detail of that. But as it comes to Labour's platform, they've said that getting the economy growing is their number one priority. GDP growth has been pretty paltry in the UK over the last 14 years. They want to get it back to the 2.5% average we saw during the Labour years under the Blair government. But money is very tight. And as they've ruled out lots of tax rises, they're going to struggle to fund those public services. So it is a very challenging time to come into government for the Labour Party, but it looks like they've won big tonight.
Bloomberg's Yuan Potts there joining us from London. And later this hour, we'll discuss also the ramifications with Ben Wellings of Monash University. As we continue to watch the pound really holding steady, of course, we had very much anticipated the results in the UK election. So European stocks also rose in the previous session with the regional stock 600 index climbing. Banks led those gains. Of course, what we're watching right now is European futures coming online, and especially what happens in France, because we had the CAC 40 gaining ground for a second session as we head towards a final round of voting in that snap parliamentary election. The polls now suggesting that the far-right National Rally will fall well short of a majority. So we had already seen French bonds being lifted a little bit, and a little bit more optimism and stability around European markets. We'll continue to watch the future session as we also watch what's happening in the U.S. Of course, we had no trading in the U.S. because of the July 4th celebrations, but President Biden's re-election campaign has really limped into the Independence Day holiday, a week after, of course, that disastrous debate performance against Donald Trump. This intensified questions about his fitness for office. For more, news desk editor Jill Deasy joins us now. And Jill, we are expecting some remarks to come from the president himself at the White House. The rhetoric, though, has been pretty defiant so far. What are we hearing in terms of a potential of him dropping out of the race?
Yes, Shery. Well, actually, the president just spoke a couple of minutes ago at the White House. Incredibly brief comments, as were really expected on this Independence Day in the United States. I think where all eyes are really turning to is what's going to happen over the weekend, particularly during Friday evening U.S. hours once he gives this interview with ABC News. I think what we're really seeing here is this intensified scrutiny over how the president acts, particularly when he's out, answering questions from others. I mean, we've seen a schedule that's actually been incredibly light on media throughout the entire year leading up to, of course, that really disastrous debate performance last week. So this is really, for the president, become an issue of can he really sort of, speak and interact for extended periods of time under this really harsh scrutiny. As you just said, we've seen quite a bit of, this mounting pressure about whether he's going to drop out of the race. The obvious replacement candidate would, of course, be Vice President Kamala Harris. Would she have the support as well to sort of pick that up? And what kind of uncertainties would that create for a campaign that's ultimately trying to combat and prevent former President Donald Trump from gaining a term in the White House that's coming November?
I mean, we were waiting for his remarks all morning, but so incredibly brief. Does that give us an indication of where he's at the moment? I mean, he probably must be exhausted. We know that he's headed towards another campaign rally as well. He has an interview coming up with ABC News as well. What can we tell in terms of where he's at, his health, and what that could mean for the rest of his campaign?
Yeah, Shery, I think that really the takeaway here is that this brief remarks that he just gave were not really much to tell, sort of assuade the general public, right? I mean, that's a very, very short period of time. I think it's really, again, that ABC News interview that he is giving that's airing, at some point Friday U.S. hours, that's really going to be at least, something that could potentially move the needle a little bit on this. But ultimately, I think what we've seen all week is that it's been really, really difficult for the White House to turn around this ghost narrative. I mean, he had, 90 minutes uninterrupted on stage with Donald Trump during that debate last week, and that really was just such a poor performance, raising all types of questions about, whether he's too old to actually not just campaign for this job, but then also carry out the job of presidency for another 4 years. I mean, that's really, really difficult to sort of ascertain when you've got those types of, debate appearances that you're dealing with here. And so what ultimately you need to see from President Biden throughout the rest of this weekend is something that reassures the public, reassures Democrats, reassures donors. That's not necessarily something that's very, very easy to pull off. We'll have to see what happens with that ABC News interview, as we just said, along with those campaign appearances, whether that's going to be enough to sort of stop this pressure campaign before it really gets out of hand for the White House and for the president.
Our news desk editor Jill Deasy is watching the latest developments around that U.S. presidential election as we continue to watch the market ramifications and the readjustments in positioning as well. We have more ahead on the Asia trade. This is Bloomberg. Take a look at the rally continuing across the Asia session. The Nikkei now trading at record high levels. The topics had already reached record highs this week. And of course, we're very much watching the Kospi as well. The Nikkei reversing some of those gains earlier in the session, but still we're holding steady after the longest winning streak since January, as the Japanese yen also holds at that 161 level. But Samsung Electronics is a stock that we're watching in the Asian session after their quarterly earnings beat expectations for the quarter of June. These are the preliminary numbers. We'll get a breakdown later in the month. We know that semiconductors are seeing a big boost because of that AI rally. And of course, UK assets in focus. FTSE futures open right now. A lot of stability across Europe, given that UK elections really turn out as expected. This is Bloomberg. UK futures trading like this after we had the FTSE 100 closing at the highest level in 2 weeks. Of course, it was really the expectation of more political stability after the UK elections. We're seeing a little bit of upside in those FTSE 100 futures as pound is pretty steady at the moment. It had already gained to that 3-week high. And as expected, the UK Labour Party now looking set to reclaim power for the first time in 14 years, with exit polls projecting a massive majority of 170 seats. But the country's new leaders will face a tall order as they inherit a basket of economic and social issues from the Conservatives.
The next Prime Minister is in for a short honeymoon as the UK faces challenges on multiple fronts. For starters, there's growth, which is proving elusive. The economy is forecast to expand just 0.7% this year and 1.2% in 2025. That's after stagnating and even experiencing a short recession last year. Productivity has also stalled, falling behind the US and other rich countries. The new Prime Minister is under pressure to control legal migration and to confront small boat crossings in the English Channel, both of which hit record highs under the last government. On housing, the UK would need a city the size of London to catch up on the backlog, with 10 people for every new property in the worst affected areas. Said to be the closest thing the UK has to a national religion, the NHS is in crisis. The waiting list in England has stretched to over 7.5 million, and it's estimated the health service needs an extra £38 billion a year. All of this comes at a time when the UK has a massive debt hangover. Servicing that debt in a world of high interest rates is costing £60 billion a year. Now that threatens to tie the hands of the next government, or to force them into unpopular tax hikes and public spending cuts.
Bloomberg's Alex Morgan reporting there. And we do have Ben Wellings now, Associate Professor of Politics and International Relations at Monash University in Melbourne. Great to have you with us. What would you say is the key takeaway from the election results as we see it through exit polling so far?
Well, if we go with the exit poll, Shery, it's a historic win for the Labour Party. It's a historic loss for the Conservatives. Things haven't been this bad for the Conservatives since the 1830s. They've never been this good for the Labour Party. So it is a historic moment in British politics, that's for sure.
We discussed some of those challenges that the incoming government might face. What do you think will be the biggest focus right now in the first 100 days in office?
Yeah, well, the Labour Party, as mentioned, as the Labour government, will have a very difficult time. You know, unlike when Tony Blair won in 1997 in very favourable economic circumstances, these are almost the opposite. The Labour Party is committed to growth. It's also committed not to raising taxes. So it will take time for the Labour Party's plans to come to fruition, and that may lead to some frustration amongst the electorate. Of course, the size of the majority will give them some buffer, but I think they need to do two things immediately: is look like they are restoring the economy to some measure of health, and perhaps in a less measurable way just restore trust in politics, because whilst this is a very significant Labour win, it's actually perhaps more fundamentally a rejection of the Conservative Party and their record over the past 14 years, which has been damaging and taken money out of the public realm. Brexit, of course, has had certain negative effects, and there's less they could have done about the pandemic and the war in the Ukraine, perhaps. But I think that there's a pervading sense in the UK that Britain was not working as it ought to, and the blame for this was laid at the Conservative door. So that'll only get the Labour government so far, of course, so it does need to look like it's taking proactive measures to restore the economy and also perhaps grow green energy and, as was mentioned, try and resolve the permanent crisis that the National Health Service seems to be in.
Domestic economic issues, of course, very important, but at the same time, it was very surprising that questions of national security were also played up during the election season. What are we expecting from the Labour Party when it comes to some of those issues that you already talked about around Brexit as well?
Well, on relations with the European Union remains the United Kingdom's main trading partner. And the Labour government, particularly if we assume that the foreign minister remains David Lammy, will be keen to improve relations with the European Union. Now, this Keir Starmer, the Labour leader, has ruled out rejoining or even rejoining the customs union. But nonetheless, there'll be some work that could be done around the trade and cooperation agreement that was signed between the UK and the EU just after Brexit. So that's one area where expect to see some changes. An area of continuity will be support for Ukraine. And that the support for Ukraine has very broad bipartisan support in the United Kingdom. And there's a NATO summit coming up. There's also a European Political Community Summit coming up in July. And I would expect to see more continuity than change there. In the Indo-Pacific region, thinking about AUKUS, the Labour Party, I think, will continue with AUKUS. If nothing else, it's good for jobs in the north of England. The main challenge to AUKUS will come through a Donald Trump presidency if that comes to pass later this year. So on the foreign policy front and engagement with the Indo-Pacific, expect to see sort of more continuity, perhaps with less bombastic language coming from the United Kingdom, but continuity nonetheless.
Does that include relationships with Asian partners such as China?
Well, that again remains to be seen. The Conservative Party has been, we might say, cautiously hawkish with relations with China. Not perhaps as hawkish as, say, the United States or Australia, given that the United Kingdom is further from the Indo-Pacific Pacific region. But I suspect I would take my cue from the Australian Labor government's approach to China, that there will be a little bit more engagement and perhaps a little less megaphone diplomacy, notwithstanding, of course, the fact that China has been pushing at the boundaries of the regional order such as it exists in the Indo-Pacific at the moment. But China is much further away in people's minds in the United Kingdom than it is in the west coast of the US and Australia particularly. So I think there'll be room for again, a slight change of tone when it comes to China, but without changing the overall perception of China's challenge, if you like, to the regional order.
Markets have been pretty calm in the lead up to the UK elections, and even into the lead up of the final round of voting in the French parliamentary elections this time around. There seems to be a more understanding right now that we might not see a huge change coming from the far-right national rally falling short of a majority. What are your expectations from the French elections and what that could mean for the rest of Europe?
Well, if the polls are to be believed, then it means that the so-called New Popular Front in France may be successful in preventing the far-right national rally from gaining an absolute majority in the French National Assembly. And I think that the markets would be relieved at that. I don't think they have a great deal of faith in the economic policies of the national rally. Look, this being said, whatever happens, Macron is going to be weakened, and that is going to benefit, I think, Russia in an indirect way, because it means that support for Ukraine will be, weakened proportionately to Macron's own domestic weakening. And especially with the NATO summit and the European political community, which is a Macron initiative, coming up in July. So I think that the situation in France has certainly added an extra complexity to international relations in Europe, particularly vis-à-vis the war in Ukraine. But it's been a huge error and a huge error of judgment for Macron, and it doesn't bode well for the centre's chance of reinstalling a president in the Elysee in 2 years' time.
Ben Wellings, Associate Professor of Politics and International Relations at Monash University. Great to have you with us with what to expect from the parliamentary elections in France and, of course, a breakdown of the UK elections as well. As we continue to watch Japanese assets trading at the moment, because we're seeing a little bit of reversal early in the Asian session. We had seen the Nikkei trading again at those records that we saw back in March, but we're seeing a little bit of downside pressure at the moment, and the topics also coming off from those record highs that we saw earlier in the week. This, as we're seeing a little bit more strength in the Japanese yen. Our senior Asia stock reporter, Hideyuki Sano, joins us now for more on this. Hide, can you make sense of what's happening in today's market? It's a tall order.
Yeah, I mean, the market has been very unpredictable these days, and I have to say quite a lot of people have been surprised by the strength of the rally. So I'm assuming this is just a short-term profit-taking after a strong rally. That said, I mean, basically, there's a growing sense that the rally is broadening a little bit compared to the previous rally earlier this year, when the gains were mostly driven by semiconductor shares and trading house shares.
Yeah, we have seen a little bit more optimism about Japanese equity markets, that they could be sort of an alternative to that very concentrated Magnificent Seven rally that we've seen in the U.S., right? Could we see this continue, though, especially if we see that persistent weakness in the Japanese yen and what that would mean for broader confidence on the Japanese economy as a whole?
Yeah, that's probably the most important question we have at the moment. Now, there's an increasing number of people are worried about the side effect of the yen's weakness, because, yes, it does boost profits of Toyota and many other exporters, but it does hurt consumers. And as we can see, the real consumption of this, over the last 4 quarters have been negative. So it's clear that the fall in the yen is hurting at least the consumption of the consumers. And so it's the question is if there will be a sort of positive cycle if the gains of exporters will be recycled into the economy, but there's question about and wage increase is supposed to be the sort of making that happen. Basically, exporters making a lot of money, and if they pay more wages, then people can spend more. But it's still not clear whether it's happening.
Especially with the household spending data today really falling into contraction territory, whether wage growth in real terms, considering inflation, can actually rise, right? Our senior Asia stock reporter Hideyuki Sano with the latest on that little bit of a reversal that we're seeing on that record high rally here in Japan. We have more ahead on the Asia trade. This is Bloomberg. The European Union is moving ahead with plans to impose provisional tariffs on Chinese EVs in a step likely to escalate trade tensions with Beijing. For more, Asia Transport reporter Danny Lee joins us now. Danny, so who are the winners and losers at this point?
Yeah, the European Union very much announced on Thursday that it's not going to back down from the additional tariffs that it had set out, these provisional tariffs that would see on top of the current 10% tariffs that are charged on EV imports. We could see tariffs of up to 38% on top of that. And so, therefore, the big losers are the Chinese EV makers, the Chinese brands who are looking to Europe as one of the next big kind of gold rushes when it comes to expanding out of their home market. And so, clearly, the impact of this could see, in fact, by one estimate, a 25% cut in the number of Chinese imports of EVs. But it doesn't just affect the Chinese EV makers, the Chinese brands. It also could have an impact on the likes of Tesla, who produces a lot of EVs out of its factory in Shanghai. You've also got some of the European automakers who produce in China where it's cheaper and export the vehicles back into the European market. So the gyrations haven't really set in stone yet with the kind of impact of what EV brands, what car makers do to potentially move production closer back to the European Union.
Usually at this point, we would be expecting some sort of reaction from Beijing. So what happens next?
Yeah, I mean, for now, the talks between Brussels and Beijing still are ongoing. They're fairly intensive, as signalled by not just Beijing, but by Brussels itself. We heard from the European Commission's Executive Vice President, Valdis Dombrovskis, who signalled very much that these tariffs do not have to come into effect. They do not have to come in as long as Beijing and Brussels can come to a meeting of the minds. And so this will be critical, these talks for the next 4 months, this kind of ticking clock on whether there can be an agreement. We'll be watching very closely to see if that does happen and if there can be a pullback from these kind of worsening trade tensions.
Yeah, Asia Transport reporter Danny Lee there. And let's actually get to those comments that Danny mentioned. The European Commission Executive Vice President Valdis Dombrovskis actually spoke exclusively with Bloomberg. Take a listen.
Today, we took the decision to impose provisional countervailing duties on Chinese battery electrical vehicles, basically to ensuring the level playing field and market distortion coming from subsidies which China is providing to its battery electrical vehicle producers. So our investigation has been done in strict correspondence with applicable WTO and EU rules, facts-based. So from that point of view, we do not see any basis for retaliation, and in any case, it's clear that we need to treat different cases separately.
So you're not even worried about retaliation, for example, into pork? They're investigating it. And if there was to be retaliation, are there specific industries that you think would be most at risk?
Well, as I said, we are not seeing the basis for retaliation, as what we are conducting is indeed in line with WTO rules. What we are also noting is that actually we are currently the largest market which is actually open to Chinese battery electrical vehicles. We know that other jurisdictions like US, for example, have recently imposed 100% tariff on those. So our aim is not to close the market to battery electrical vehicle producers from China, but only to ensure the fair competition and level playing field. So therefore, once again, we do not see any basis for retaliation for that.
So how's the progress going in terms of talks with China? And actually, is there willingness from China to make some of the substantial changes that led you to then put the tariffs on?
Those talks with China are ongoing, and indeed, should the mutually beneficial solution emerge, we can also find ways and not to apply at the end of the day the definitive tariffs. But it's very clear that this solution needs to resolve the market distortion which we are currently having in battery electrical vehicles and risk of injury for EU industry, and it needs to be WTO compliant.
Are you worried that member states can actually then block this, block the tariffs in November, or force the EU into a bad deal?
Obviously, we are in a close consultation with member states now, also prior to imposition of those provisional duties. And it's clear that member states are also interested to protect their automotive industries from unfair competition and from risk of injury, as actually the market share of Chinese, both Chinese brand and broader, like made in China battery electrical vehicles, is rapidly growing. So from that point of view, if we leave the situation unaddressed, it's going to create more and more problems actually for EU automotive industry.
Executive VP, we're also days away from the second round of the French, of course, legislative election. Are you worried that a hung parliament would actually delay any kind of negotiation on policy, or would delay the workings of the European Commission and the EU?
Well, definitely we'll have to see. Well, there I have to provide somewhat institutional response, because in the European Commission we have a clear policy that we are not commenting elections or party politics in member states. We are working with democratically elected or appointed authorities from member states.
European Commission Executive Vice President Valdis Dombrovskis speaking exclusively with our colleague Francine Lacroix. We have more ahead on the Asia trade as we continue to watch those UK futures. We had seen gains for UK assets before the election, and now we have more certainty coming from the exit polling. We'll get to those first. But in the meantime, we are getting the latest. Right. I will get back to you after the break, but we'll be watching those European assets. This is Bloomberg. We continue to watch European futures. Of course, we got the UK election exit poll now projecting Labour to win 410 seats, the most since Tony Blair's 1997 victory. We had already seen the FTSE 100 record its best day in 2 weeks ahead of the election. The pound had hit a 3-week high on Wednesday as well, the expectation being for more political stability. So really those futures looking pretty stable at the moment, not doing much. In fact, FTSE 100 futures gaining 0.3%, as sterling is also pretty steady at the moment. In fact, broader European stocks rose headed towards the UK elections that some analysts are calling pretty boring, because really polling was pretty consistent in the 6 weeks of general election campaign. But of course, we are headed to the final round of voting in the French parliamentary elections as well, so do watch out for that coming up this weekend. We had seen the CAC 40 gain ground for a second session. Here in Japan, we continue to watch the Japanese yen because it's now seeing a little bit of strength against the US dollar, but still when I talk about strength, I'm still talking about 1986 weakness levels. We had seen the Nikkei and the Topix sort of fluctuate between gains and losses, but the Topix is now firmly below that record high level that we saw it at all week. The Nikkei also at one point touching those record high levels, but right now under a little bit of pressure. This as we continue to watch some of those big stocks across Asia, including Samsung, which beat expectations when it comes to their earnings for the June quarter. The Kospi is gaining 0.6% at the moment and bucking that trend, given that, of course, Samsung is the biggest stock in South Korea. U.S. futures not doing much. July 4th holiday, so we'll be watching for those non-farm payrolls on Friday. The expectation for 190,000 job gains in the U.S. FTSE A50 futures change really did not do much at the close. The China trade is next. This is Bloomberg.